So first thing I do is check the news, see what's going on today. So you can go to whatever site you want. So just to show you from my website, IncomeOptionsTrading.com, you can go to resources and go to 0 DTE complementary data. And I have a link on there to Forex Factory, which is what I use. So you can click on that. And I have it set up so it's filtered to just the US dollar currency. So that'll just, for the most part, only do things that affect the US market. You can turn on all of them or select which ones you want through there. But I just do USD. So you can look. Monday, market was closed. Tuesday, nothing going on. So the yellow is low. Right, here we go. Low impact expected. Orange is medium impact expected. And red is high impact expected. So I usually trade around the red. So Tuesday, all yellow. Biggest one is this FOMC member speaking, but it's a low impact expected, so that's why I chose today. Tomorrow and Thursday, Powell, the man, testifies, so I will not be trading tomorrow or Thursday. Whenever Powell speaks, the market listens, and it gets pretty crazy. So I will be skipping. And then Friday we have PMI, which is 15 minutes after market open. So I will be trading on Friday. So this week, Tuesday, Friday. Rest of the days I will be out. I'm out this week off of work, so got plenty of things to do around the house, so I'm not worried about it. So that's what I do at the start. So market opens here, and for time frame of charts that I use, I don't really watch the chart anyway, so it doesn't really matter. But I like the 2 minute. 1 minute's too short. Anywhere from 2 to 15 minutes, I think is fine. I like the 2 minute. Yeah, it's kind of personal preference. So yeah, someone asked me, can you explain your typical strategy? Selling option spreads are naked. If spreads, how wide? Entry targets at specific delta or time of entry? So yeah, we can go through that. I usually enter it roughly 15-ish minutes after market opens. So it's 8:31 now. So in about 14-ish minutes, I'll open up my first tranche, if you will. So what I show in my trade log is always one lot. I don't like showing extra large and saying, oh, look, I made 10 grand today, because then people are like, oh my gosh, it's the holy grail. So I don't like to show that. I only show one lot. It's one trade a day. That's what I go off of. So I'll just pull up if anyone is interested. So on my website, I have it loads here. I have my trade log. Actually, it looks like this is my performance. If you go to blog here and then scroll down, I think it's the second one. I have the SPX Iron Condor returns here. So here I have my trade log. So I update this each day that I trade. It's not too timely, so you can't really use this if you're actually trading that day, because it's, by the time I put this in, it's already maybe an hour later or even 20 minutes later. But here's my trade log. So if you're interested, you can go through this. I got date, the underlying, put or call spread, credit received, what I set my stops at, if the stop filled that day, and then the P&L credit and the sum of the P&L, and then the premium capture rate, which is basically taking all the credits compared to the profit. So total credit is 15 grand. Total P&L is just over 4 grand. So premium capture rate of 29.1%. Usually this is around 25-ish% on an annual basis. So doing probably a little bit better this year than what you might expect. But so that's there if anyone is interested to go through kind of my trade log for each day and see how things are at. So I trade SPX. There's a lot of discussions out there about which underline to use. You can use SPX, you can use the ES features, the MES features, you can use SPY if you wanted. I'm not going to go into detail onto why I do SPX, but that is what I use. Like I said, I use a 2-minute chart, but it doesn't really matter. So 0 DTE, go there. So last week there was an AM expiration, and someone asked me, "Hey, why are my options acting different than what you have?" And that's because they use the AM settlement. So I never do AM settlement. So you can see AM here. Don't trade those. Trade the weeklies. So both of those have the same date, but one is, whoops, sorry about that. Both are July 21st. One is AM, one is weekly, and the AM is 30 days, and the weeklies are 31 days. So the 30-day ones, the AM settlement, you can only trade till the day before. You can't trade the day of, because whatever SPX settles at in the morning is what your options will settle to. So you can't trade during that actual Friday. So do weeklies. Anyways, go back to 0 DTE here. So tastytrade, formerly known as Tastyworks. The deltas don't do a great job of updating right away. So I usually go somewhere between 5 and 10 delta. With VIX so low, VIX is at 14. I've been going a little bit higher in delta. And so I usually go for around that $1-ish mark. If you're going by delta, then the put, I might go here, which is an 8 delta. On the call side, it's going to be a little less. So 75 cents. So if you want to go delta, you could go here if you wanted. I have no problem with that. If there was maybe a medium level impact expected event, I'd probably go with the lower delta. But typically I'm going around that $1 mark. So I probably would sell these right now. So what I do, instead of doing this as a strangle and using $85,000 of buying power, I just buy the first option that I can get for a 5-cent bid and 10-cent ask. So I'll buy that. I'll go on the call side, 5.10, buy that. And that brings our buying power way down. So from 85,000 to just under 6,000. So just a more efficient way of using it, using your capital. But when I'm going through this and setting my stops, I only set the stops on my shorts. So I pretend this is a strangle. I only buy the longs for buying power reduction. That's it. Otherwise, I treat this as a strangle. So you can see here from the deltas, we must have had a little pop in the market. Go to the ES. Yeah, so right before market open, we were pretty low. We're kind of bouncing back. So the strikes that I chose are no longer the best here, but looks like it's coming back a little bit. So that's pretty much what I do. I put on the call spread and put spread separately. You can put this on as an iron condor if you want, but I find it easier to put it in as two separate spreads, and that way you can adjust the spreads a little bit quicker. If you're doing it as an iron condor, it's just you got to move both sides, and you might not get filled because of that. So I usually just do the put side, put it in, do the call side, put it in, and then I go and manage the trade that way. And so tastytrade, if you right click on the bid ask of any option, you can click view option in chart. Sometimes that's helpful. If anything else, you can put alerts on these options. So when I click that, you can see that the ticker changed to this actual put. So it's the 4370 put. Looks like is what I clicked on there. So on here, you can go to the alerts, which is the bell. And the alert is on that option. So I can do greater than, and you can change it to bid or ask or last. And you can put it to something if you want to get alerted on. So I create alert. So now it's tell me if this 4370 put is greater than $5. It'll alert me. So this is a good way of a fail safe. Like I said, I put in my my stops, and then I pretty much just walk away. But the alerts I do so that if my stop for whatever reason doesn't get filled, it'll alert me if the price is really high. And then at the end of the day, you can just remove them. Stop types. I use a stop limit, and I do a 40-cent wide on the stop and the limit price. So if I sold this short put for $1, I would make this $3. And then I would go 40 cents higher and put the limit at 340. So what this trade does, or the stop does, is if the price hits $3, it'll put in a limit stop price at 340. So the highest I could get filled at is 340. So I've never had it blow through a stop before, which is why I'm comfortable with 40 cents. Doesn't mean it can't happen. So not trading advice. But in an instance where maybe the market drops very rapidly, and it skips right past 340 and goes directly to $4, my stop limit won't trigger. In that case, I'll still have this trade on. The stop limit order will be active, so if the price drops back below 340, it'll fill. But as long as it's above 340, it won't fill. So that's where my alert comes in. So if I have an alert at $5, it could benefit me because I could see, oh, the price jumped to $5, but my stop never hit. So I better open up my platform and take a look. So the alerts are helpful. I know in Thinkorswim you can do the same thing as well, which is really helpful. So I use that because I'm not watching my screen. Like I said, I have a full-time job, so it's pretty much put it on, set and forget, and move on. I think it's close enough to 8:45. We can start putting on some trades. So I'll usually watch this. Like I said, I usually put this on around 15 minutes. If the market is just going straight down or straight up, I might wait, or I might just put it on one side. Today, the market's been going sideways, so I can put it on now. So, like I said, go to SPX, the 0 DTE, open that up. I usually try to go between the 5 and the 10 delta. With VIX being so low, your 5 to 10 delta is going to be a lot less than what it typically is. So I've been going a little higher, and so I'll go with the 11 delta on the put. So this 115, the 43.65 put, and then I will buy the first 5-cent bid, 10-cent ask option just to lower my buying power, and then I will lock that in. I'll set it as a day. I'll just put it at 105 for now, and I'll put that in. And I'll go to the call side, do the same thing. So you could go with this 8 delta if you wanted. I'll probably do that. 140, 145, that's a little high. Really, it's up to you. I'll just go with the lower one. Then go to the first 5-cent bid, 10-cent ask, and buy that. And so I'll put that in. I'll bump it up to 85. So then, activity. So you can see prices are coming down on both sides. So I'm not going to get filled. So you can go in. I'm going to leave that one a little bit. It looks like the market's dropping a little bit. I'm going to cancel this and go to this. I'm going to move the strike up and go back to the 5-cent, 10-cent bid ask. Put that in. And I just kind of let it work a little bit. So this one's not getting filled, so I'll just replace it. You can see my call side got filled at 125, and my put side got filled at $1. So then when I go into here, I'll go into SPX, and I only look at the actual shorts that I got. So here I have a cost column. So the short put I sold for $1.07. That's how much I got on the short put itself. And the short call I got 132. So these are the numbers that I base my stop off of. I don't base it off of the spread. So I'll say that again. I base my stop on the price that I actually sold the short put and short call only, not the spread. So I should have had my calculator up. So there's that. So I'll start with the short put. So short put, I got $1.07 for just that short put. I go with a 3x stop on it, which is 2x net loss. So I multiply that by 3, and we get 321. Now SPX options, if it's above $3, they go in dime increments. So you could either set this at 320 or 330. I always round up, so it gives myself a little extra room. So I'll put the stop at 330. So I will close. I put in a stop limit. Put it in at 330 because that's a 3x net loss. 330, and then I go 40 cents above for my limit price at 370. So now, if the last order for this option is above 330, it'll put on the stop limit stop order at 370. So I'll put that in, and I'll be good to go. Now, what I'll also do is I'll right click on this 80 cents view option and chart. You can see my stop there. I'll do the right hand side, and this alert will be for that. So if my stop limit's 370, I'll put this at 420. And so if the ask, or you can do the bid or the ask, whatever. Maybe I'll do bid and I'll do 4 instead. So if the bid is greater than $4, create alert. It'll alert me, and you can set up alerts for text or email or whatever. So this will alert me if that option gets to $4. Now I'll do the same on the call side. So I'll go back to my positions. So the call side I got for 132. So I'm only looking at what I got on the short option itself, not on the spread. So 132 times 3, 396. So I'll round this up to the nearest dime, which is $4. And then I will add 40 cents. So stop limit, $4, 440. And put that in. And then again, I'll go in here, view option and chart, do the right hand side, and I'll do, let's say, $5. Great alert. Don't you wish you could automate this? No, I don't want a robot doing this. I want to be able to pick my strikes, and look at the market and actually see what it's doing when I put the trade on. So I want to have all the power pointing it on. I don't want to leave it up to automation. Generally speaking, to be extra conservative, I would say 25 grand your account size should be for a one lot. And that's conservative. That's not trading advice. Do you let them expire or take profit at 10 cents or something? So I always let them expire. Like I said, I don't watch the market. I don't watch my platform all day. So I let them expire. You can do the back tests if you want. If you take profits early at like 10 cents, your P&L graph will have less spikes and less drops. It'll be more steady, but overall you'll make less profit in the long run. So I just let them expire. Do you open more ICs during the day? So I work full time, so I usually am not looking at my platform, so I usually don't. I only show one lots for my trade log and for my Discord, but I do open more than one during the day typically. Today I'm just gonna open up one on here. But I usually open up one so that I can post that trade, and then I open up my normal size right after that. But if you're not doing anything fancy, I would just open up all of your lots all at once. You can do something where you spread it out throughout the day if you want. That's kind of what like Tammy Chambliss is doing with a multiple entry iron condor. So if you spread your entries throughout the day, your P&L volatility will be lower, so your P&L graph will be more smooth, but you'll have less profit. So it's and less drawdowns, less profit and less drawdowns. So it's really up to you on what you want. So sometimes what I'll do is I'll put on one lot here and then I'll wait, 15 minutes and then put on another and then wait 15 minutes and put on my other tranche. And do kind of that, but it's usually all within the first 1 to 2 hours of market open. So, you can do back testing if you want. I have a link. So I use option Omega. I'm not going to open it today, but I have a link, referral link. So if you use that link, you get 50% off your first year. So if you're interested in back testing, option Omega uses 1 minute data, which is what you really need for 0 DTE. I say anything under a week for DTE, you should be using 1 minute data. If you're using even an hour data or end of day data, it's too long of time for that short of duration. So link in the description below if you're interested. It's 50% off your first year. And there's monthly plans and annual plans. So if you do monthly, it's 50% off for the first 12 months. So you can try it for a month and then cancel, or you can keep going. So someone asked, if you get stopped out, do you get back in? I typically don't. It depends on what I think. I'd say maybe 5 to 10% of the time I'll get back in. But most of the time the market is just a train and I don't want to step in front of it and get another stop out. Like I said, if you do the 300% stop loss, after 2 days, if you have one stop, you'll come out on top. So, you know, it's to me, it's the long run. You don't have to win every single day. You just have to win, after a month, after a year, and so not going back in is usually what I do, just because I don't want to get double stopped. So here's a link to my Discord. I have a free section and a paid section. So free section is more so for general chat and discussion. For the most part, I have some links in there. The paid part, the main advantage is getting some near real-time alerts. So I didn't post today, but if you're a paid member, immediately after I place my trade, I post it in Discord so you can see what trade I'm doing that day. Like I said, I always update my trade log. That's always free. But I might not enter that information until the afternoon. So by the time you see it on the trade log, you can't really use it. So I know some people like to follow or see what other people are doing in more real time. So if you're interested in that, you can sign up as a gold member through YouTube. So you click the join button here on YouTube, go to gold member. It's $10 a month. And then in Discord, you link your YouTube and Discord together, and then you'll gain access to the paid services. I have other trades that I post as well. I do some short puts, typically in MES. If I do any earnings trades, which I really don't do anymore, that would be part of the paid feature as well. So just if you're interested, it's not a big deal if you don't. It's really just for people that want to see what I'm doing in more real time. Can you explain more how you enter your trades when the day gap and keeps trending on the direction after the open? So if the market is trending in one direction right away, kind of like it's doing now. So let's say the market opened here, and it just was a straight shot down. I'd either enter the call side and then just wait, or I might just cancel or not trade that day, because there's plenty of days where the market just is a train and I don't want to step in front of it. So I'm okay with taking a day off. Like I said, this is a long-term strategy for me. So on a day-to-day, if I lose, I've been doing this long enough, I don't care. So like I said, trade log here. There are some days or some weeks where I have a lot of stops. Like the month of June, I've traded 1, 2, 3, 4, 5 days, and I have 4 stops. So it is what it is. It sucks, but go all the way down. Whatever. So I have a graph here as well, so you can see kind of where I'm at. So it kind of goes up and then sideways, and then it's up and then sideways, and then it's up and then it's sideways, and then it's up. And right now I'm in a sideways trend. That's fine, but it's looking at it in the long run. I'm not concerned about between April 1st and May 1st, or I went down a little bit. I'm not worried about that, because in the long run, it's an uptrend. You're never gonna be straight shot up every day, no matter what. So, think of this as a big picture. Think of it as a year-long thing, not just a one-day thing. So I started tracking this, or at least posting this, back in 21, I think in like April. So I have all that data here. So in 2021, I had a 22.4% capture rate. Like I said, usually it's around that 25%. So last year, 20% premium capture rate, and then this year I'm doing a lot better at 29%. So, and you can look through that. This is real real data. It's not paper trading or anything. So I look at this as a long run. You know, it's not a every day I need to make money, because there's going to be days where you don't, which is fine. There's going to be months where you don't. You know, some people might start in the month of May and then they say, oh, this is the worst trade of all time because, you know, or I guess start in April and then by the end of the May they're down money. You know, if you start here and end there, you're going to say this is a horrible trade. It doesn't make money. But it depends on when you start and look at it for the long run. So if there's a day where I can't trade, then that's fine. If I'm busy with work or busy with personal stuff, then I don't trade. So there are a lot of gaps here, like in May, and part of that is because of the events that I talked about. So like at Forex Factory, if there's a high impact expected event, which is red, I'll either wait till after that, or I might just not trade. So tomorrow, Powell the man testifies, and Thursday. So I'm not gonna trade those days. I'm not gonna stress about it. I don't care that I'm missing 2 days. So one nice thing with the 0 DTE is now that it's 5 days a week. So before when it was 3 days a week, and if Monday, Wednesday there were events, then you only had Friday. So that was only 1 day a week. But now you have the Tuesday and Thursdays that you can trade too. So there's a lot more instances that you can trade. So missing a day isn't as big of a deal anymore, which is nice. How much money are you making with this strat? So on a one lot basis, as we can see here, one lot basis, I'm up $4,400 this year. Last year I made $8,000. And in 2021, which just started I think in April. Yeah, April 14th is when I started doing this. Oh, $4,000. So this is on a one lot per basis. Like I said, conservative side, I would suggest 25 grand for per one lot. So $8,000, that's 32% on your account. So obviously if you go less than 25 grand, you know, if you use 10 grand, it's a little more risky with the drawdowns, but you'll make more money, potentially, but you could blow your account. So I have a YouTube video on kind of the drawdowns. So kind of the account size versus what delta you're doing. So take a look at that if you're interested. But I think I went with 5 delta and 10 delta, and I did data through I think like 2019 maybe. I haven't done an updated video, but that was with 3 days a week for the most part. So the numbers might be a little bit different now, but it'll be pretty close. Today's trade call's not filling since we're dropping. Would you adjust the call side to different strikes? Yeah, so I think as you're going through, that's the trickiest part, is right away when you're not getting filled, you know, what do? Do you adjust the price? Do you adjust the strikes? I usually wait probably 10 or 15 seconds typically, and then I'll adjust. I'll either change the price or I'll change the strikes, or both. So it's kind of up to you, but yes, after 10 or 15 seconds, if you don't get filled, I would adjust the trade somehow. The hard part is, like here where it seems like it's all down, if you're aggressively lowering the call price and then you get this pop, you could have been a little bit more conservative, and on this pop back up, you could have got filled. So it's always, it's not a science, it's kind of an art. So I usually try to get filled because I want to get filled roughly the same time as the put in the call. So I usually try to adjust it relatively aggressively at the start, but it's kind of up to your own trading style. Would you also close the other side when you get stopped. So no, I leave the other side. I leave each spread independent as one another. If you had an account where BP wasn't really an issue, would you skip the longs altogether? So that's a tough one. I think I would still sell, or excuse me, still buy the longs. I think the difference would be instead of buying the 5-10 cent option, I'd probably go to the first 0.5, or maybe try to get filled at probably the first 0.5. Try to buy that for 5 cents instead of, typically it's like 7 cents. 7 cents for that long. Just because, like I said before, when you're selling a strangle, your BP is going to be like 85,000, 86,000. If you buy that long, it reduces the buying power a lot. And I would want somewhere around a one lot per 25 or 30 grand. So you could really sell 3. Like if you had an $86,000 account, you could sell 3 of these instead of just one, just by buying this extra long. So I would still buy the long to reduce that buying power. So let's see how my trade is doing here. So right now my put side is trading at 215, so still $1 away from my strikes. I'm curious how close we got. So not too far, or not too close, I should say. So yeah, that's good questions. I appreciate the questions. I appreciate everyone coming on. That's really all I have. So kind of a recap. I start the day by looking at events for the week, for the day, and base that on whether or not I want to trade. If it's a high expected impact, then I'll either wait till after that event, or I'll just skip that event, or skip that day. Like I said, today, no high level expected, so I traded. Tomorrow and Thursday, there's the red days, so I am skipping, and then Friday I'll do a later entry. So that's what I start with. Once I do that, about 15 minutes after the market opens, I'll put in my put spread and call spread separately. I'll go somewhere between the 5 and 10 delta, or on the dollar credit mark, and I'll buy the first 5 cent bid, 10 cent ask option, just for buying power reduction. And I'll put those orders in separately for the put and call side. And then after I get filled, I'll go here, and based on the amount of credit I receive for just that short option, that's what I base my stop off of. And I go 3x what that price is. So 132 here for the call. So I took that, times it by 3, it was 396. Anything above $3 goes in dime increments. So I round up to the nearest dime to $4. So I put my stop in for $4, and then I add 40 or 50 cents for the limit price. So I'll put in a limit price for 440 or 450. So I'll do that, and then I set my alerts over here. So I'll right click on that option to go into it. Ooh, real close. And then I'll put in an alert for that. So I'm seconds away from being stopped. So exciting stuff. There it is. So I got filled at 340. So my stop was 330. Limit was 340. Stop was 330, limit was 370. I got filled at 340. So today was another losing day. But that's all right. June has not been the best, but that's okay. That's how it goes sometimes. So, like I said, some days re-enter, some days not. Let's see. So typically I probably wouldn't re-enter, just because I'm live. I'll put in a new trade. Why not? So I'll reuse this long, and I'll just go for something around $1. So another thing you can do is, and this is more on the call side, but if you were to get stopped, and let's say this was going for like 30 cents, I could sell the option that's further away and make this into a debit spread. So you take in a tiny little bit extra, and you make it into a free debit spread, so you have a chance of making $500. Obviously, if you didn't sell this and you just left this long alone, you could sell this later, or you could wait and sell this this option later for more and get some of your money back. So when you have this leftover long, you can do quite a bit of stuff that you want. It's kind of up to you. Since I'm working, usually if I see that I get stopped, I'll usually just make this into a debit spread. So I take in a little bit extra of credit, and now I have a chance of making an extra $500. So before I forget, I am going to it's 43.50 call. So I sold it for $1.05 times 3. 315. I'll round up to the nearest dime, so 320. And make this 360. So this is a prime example of why I don't re-enter, because market is a train and it just keeps going down. So normally I wouldn't do that, but today, why not? So 360. So right click, go to the sidebar here, make it so whatever, $4. Create alert. So now another alert in there. You saw earlier that my alert went, so it didn't really matter because my stop actually triggered. But if it didn't trigger, then that alert is nice. It also went to my phone. All right, well, that's all I got. So you can always email me, IncomeOptionsTrading@gmail.com. You can join my Discord if you'd like. I'm also on there, or reach out to me on Facebook or Twitter or wherever. Always happy to help. So thank you everyone for watching, and hope your trading goes well.